right, let's get to SoFi. That stock getting a pop today. It's off its highs, but still up more than 3%. President Biden announcing last hour the federal government is canceling $10,000 in student debt for some borrowers, likely to affect some 40 million loans in total. Joining us now for more is Mizuho's Dan Dolev, covers SoFi. Dan, first just talk about the general implications of this move in conjunction with the fact that the moratorium on paying interest on student loans is going to end at the end of this year. How does that run up against SoFi's business?
Hey, Mike, thanks for having me on the show. Look, this has been a huge drag on the stock, and we're so happy to see that drag go away because it kept, for the last 2 years, we've been hearing, it keeps getting extended. And what ends up happening is when, there's finally clarity about this, then you're going to get a big wave of refinancing, and that's how SoFi makes money, right? In 2019, it accounted for about 60% of volume, 60. It's down to 20% now in the first half. So if you get that refinancing boom again, now that you have that, the moratorium clarity ending, I think it's going to be great for SoFi. So that's how it kind of plays into the SoFi story.
So the elimination of student loan balances based on the forgiveness of this $10,000 is not going to offset that at all? In other words, people won't have as many as loan balances to refinance if that happens?
It's only about, I think, about 50%. So remember, there's the benchmark is 125,000. So it's only about 50% or so of their book is below 125,000 of income. And the average loan balance is about 70,000. So you still need to refinance your remaining loans. Plus, the people that have higher incomes now have clarity that they're not going to get a pass anymore. And that might create them to basically stop, kicking the can down the road and refinance again. We've seen this in the fourth quarter of last year when people thought that the moratorium was going to end. You saw a huge boom in refinancing. I expect to see the same thing in the fourth quarter. It's happening sooner and it's happening bigger than what we thought before. And that's why we're saying, Biden is forgiving. Don't forget to buy SoFi.
And then just bottom line, clearly it's not the only driver of SoFi's business, but how else is it situated? Here we are with about a $6 billion market cap on the company right now. It's well down from, the highs of a year and a half ago or something like that, as people rethink maybe, the model and what to pay for it and whether profitability is going to be nearby.
I think this is a great time for SoFi because remember, in an environment where interest rates are rising, SoFi has a huge advantage. They're lending like a bank, right? They're lending with their own balance sheet, and they get a better cost of capital. So they can make a bigger spread when others are having trouble, right? We've been in this environment where lending is a problem. But SoFi, because it's got the cachet of the fintech, it's got a huge brand, and great management, and it lends like a bank, it's got sort of the best of both worlds, or the best of all worlds. And, we're getting more and more calls from investors who are interested in SoFi these days because it's very, very uniquely positioned. Plus, there's more liquidity with SoftBank selling. So it's sort of like that perfect environment or perfect weather for people to get back into SoFi.
Well, we'll see if fintech is still something that has cachet, I guess, over time. But Samir, let me just ask you quickly, in terms of the macro implications, if any, of the student loan forgiveness, some people say it might drive more consumer inflation, others that it just refresh, household balance sheets. Is there really a play in this from the macro side?
It probably does, kind of put a little bit of, confidence back in the consumer's mindset, right? I mean, there's been a lot of things that have kind of weighed on it, whether it be, wages, whether it be gas prices. I mean, this is definitely something that should ease some of the pressure on the lower end of the consumption, brackets. And if anything, it feeds back into that conversation from earlier about making the Fed's job a little bit harder because now you're getting consumers feeling better again.
Right. Yeah, there is a push-pull for sure. Dan, and thank you very much. We'll catch you again soon, I'm sure.